Alright guys, welcome back to the channel. My name is Matthew. I'm a college student. I just recently got into investing. During the summertime I started watching a lot of YouTube videos, learned about dividends, and how that could set you up for a pretty nice retirement. So, let's take a look at my portfolio. It changed a bunch, because back when I filmed my last video I had only invested $100. I only had about 3 or 4 stocks. My portfolio has changed a bunch. Alright, let's take a look. Let's just take a look first at the capital appreciation my stocks have given me. So in the day we've been up, the market has been rallying. So in the week we're actually up almost $50. That's super impressive. In the month, 83. 3 months, 94. I started about 3 months ago. In the year we're up almost $118. It's amazing. It's pretty ridiculous. We don't get that type of return in a savings account. Not at all. Like the highest is like 1.8% interest on our money yearly. So let's take a look. Alright, I have 16 shares of AT&T. I used to have like 1 or 2 back in my last video, but I've just been adding a lot. Recently I stopped adding though because it was just too much. Had too much allocated into that stock and it's too risky. I don't want to have more than 30% in one stock because I just think it's definitely too risky. If it goes under, if they have a bad quarter, if they have to cut their dividends. So I'll add on later on, but not right now. So I have 16 shares. My average cost is $38.02. I am up almost 3%, $18. And I still haven't collected a dividend from them, but when I do, it's going to be, let's see, $8.32. So that's going to be pretty nice. It's in about 2 months. TNT has been going up a lot, but I think they're positioned in a good place. Hopefully with HBO Max, they could capitalize on that. Okay, so the next stock is MPLX. I actually just learned about this stock a couple weeks ago. Marathon Petroleum, if I'm correct, like a gasoline company. They were the ones that founded this company, so they could transport their gas, and now they're also transporting gas and petroleum. So it's actually a super interesting company. It's a MLP, and the stock has just been, it's plummeted in the last year and in the last 5 years as well. But I've been reading up on it. It offers a almost an 11% yield, 10.5 when I bought in just a couple of days ago. And the thing is, they could cover their dividends with their earnings at 1.5. So like, it's their dividend is safe. Like 1.5 times their earnings is their dividend. I do not know how to explain it, but you know what I mean. So they have a lot of room to grow that dividend actually, and they have been a lot. So my average cost is $25.86. I bought them all together. Like I bought the 12 shares all at once. It's not pretty smart to go all in on a company straight off the bat. However, I just thought it was a steal. I still do think it's a steal. I'm up 18 cents. But they pay about a 67-cent dividend, so I'll be receiving around $8, maybe a little bit more. We'll see. Okay, this is a good one. Home Depot. I got 3 shares of Home Depot about 2 weeks ago. It was plummeting. If you take a look here, in the 3-month chart, it was up by around 238. And then it plummeted after they lowered their outlook for 2020. It plummeted down to like 212. I bought in at 213. As you can see, my average cost is $213.79, and it's just rebounding. I knew it would rebound because their balance sheet is good. I think people are just expecting too much from them, and it's hard to keep up such a high growth rate. But let's see. So as you can see, they are rebounding. I've made $22. I just bought those 3 shares like 2 weeks ago. and their dividend growth rate is amazing. It's been like 20%, but it's pretty hard to sustain such a high dividend growth rate. But even a modest 10%, that's still substantial over time. Compounded over time, it's gonna add up. My next stock is Microsoft. I have 3 shares, and in terms of capital appreciation, this has given me the most returns. Only 3 shares, keep in mind. My average cost is 146 and 63 cents. Equity of 472 and 77 cents. It's a little less than a fifth of my portfolio. And it's in total return, I'm up almost 7.5%, almost $33. The dividend is pretty low, but they've been increasing it substantially every year. Now it's 51 cents. Last year it was like 40 cents, 35. I'm not too sure. Okay, my next stock is IBM. I have 2 shares of IBM. They pay like a 4.8 or 4.9% dividend yearly. And I'm currently just up less than 0.5%, only $1.21. My average cost is $134.98. However, I don't think I'm going to be adding to this stock too much, because although it does pay a high dividend, it offers a high yield straight from the bat, and they're probably going to keep growing their dividend as well, just so it could be appealing to investors, because their earnings haven't been too well in the past. And like out of the last 10 quarters, most have been in the red. So it is pretty risky. I just want to see them be on the green in their earnings and beat expectations before I buy back in, even if I do have to pay a premium for that. I don't want to take a risk by buying a stock that has been in the red for so long and so often as well. But hopefully they'll improve and they'll be in the green, profitable again. Okay, Johnson & Johnson. This is pretty crazy. So I bought in at 128 when the talc powder problem came out, and it was just scandalous. They had apparently found asbestos in their talc powder. So let's look at the 3-month chart. When did I buy in? I bought in at 128 a few months ago. I bought in at 128, and from that 1 share, I'm already up almost $18, almost 14%. That's pretty ridiculous. I've gotten 95 cents in dividends since then. Got paid once, but they have a low payout ratio, and I think they could keep growing their dividends for the years to come. I think it still is a buy at this point. Let's see, my last stock is BP. They have a pretty high dividend yield straight off the bat. It's about like 6.6, 6.7, 61 cents per quarter. That's their dividend. I bought in at $36.64. I'm already up a little. Like, I bought them when they were literally bottoming out. They're starting to rebound, just because they were so low. But I want to keep adding to this position. I also have a few other stocks I have in mind, like Bank of Nova Scotia. That pays a nice dividend, a little bit below 5%, but they're growing it fairly. Have AbbVie on my watch list. Hopefully we could be adding to that. But I'll leave that for another video, actually. I'll talk about stocks on my watch list and why I think they're good buys for 2020. That could be the topic of another video. So I'll keep you guys updated. Subscribe, and you could see how I'm building a foundation. Dividends. It's like buying dividend companies, and it's like building a foundation. Building isn't really too fun, but one day we hope to reap the reward. As dividend investors, we may not always have the capital, but when you're young, you have time on your side. So time is just as valuable as capital. Thanks for watching and staying till the end of the video. Make sure to subscribe. I'm going to be uploading videos every time I buy stocks. I'm going to be updating and making videos on stocks on my watch list and so on. There's so many topics to cover with investing, dividends, so definitely subscribe and stay tuned.